This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, a quick update on the markets. Ghana's main index is a high city gains among the indices we track on the program, even after today's huge drop, nearly 5%. It's still up 38% on a year-to-date basis. At the top 14 in South Africa, MTN and Aspen Pharmaco are up over 4% in today's session. Impala Platinum not far behind, closing 3.5% higher. The mining pair of Goldfields and AngloGold Ashanti around 3.9% and 3% lower in today's session. The big story everyone's swirling around the world, Evergrande, the Chinese real estate behemoth, it saw a marginal recovery in shares in Hong Kong today, roughly 40% higher at the close, but the firm's financial situation is still quite grim. Remember, it has an $83 million coupon payment due today with a 30-day grace period. That payment had not been made as of 10:45 GMT. Here's what's coming up tonight. Zambia's president is in Washington for talks with the IMF for a rescue package for Africa's second largest copper producer. South Africa's cabinet approves lower emissions targets ahead of the COP26 summit. And we look at what Europe is doing in the face of an imminent gas supply crisis. All that and more is in the pipeline for you tonight. But let's start in Zambia at this hour. President Hakainde Hichilema is expected to meet officials at the International Monetary Fund and the World Bank in the days to come. This is the latest attempt for Africa's second biggest copper producer to secure a lending program to help it emerge from a crippling debt crisis. CGTN's Najma Abdurizak takes a look at what to expect ahead of the meeting.
Over $3 billion in Eurobond debt and a further $3 billion owed to China. These are just some of the challenges at stake as both Zambia and the International Monetary Fund get ready for their latest talks in the days ahead. President Hakainde Hichilema is in the US this week for the United Nations General Assembly. According to his spokesman, Hichilema is expected to meet officials at the International Monetary Fund and the World Bank in Washington. Zambia's government formally asked the IMF for a financing arrangement last December. The Southern African copper producer is betting on an IMF deal to restore creditor confidence. And an IMF loan arrangement will also steer President Hichilema's much-needed economic reform plan into action. Hichilema was elected last month on a promise to tackle corruption and to end Zambia's deepening financial and economic crisis. According to the African Development Bank, Zambia's economy plunged into its first recession since 1998 last year, contracting nearly 5%. In November 2020, Zambia also became the first African nation to default on its sovereign debt since the start of the COVID-19 pandemic, when it stopped servicing payments on nearly $13 billion of international debt. The government has a $750 million Eurobond due next year. The global shutdown came on the tails of a challenging few years, which had seen growth slow to around 3% since 2015. Economists, however, now expect the international confidence in Hichilema's presidency and the strengthening of the local kwacha currency since his election to help Zambia secure a deal in its latest talks with the IMF. Najma Abdurizak, CGTN.
All right, then let's explore this in a bit more detail. Caroline Malone joins us now live from Washington, D.C. Caroline, so the president is due to meet the IMF and World Bank officials, but do we know exactly when that meeting is scheduled?
Yes, we do. The IMF have just told me that Zambia's President Hakainde Hichilema and IMF officials will be meeting this afternoon. It's currently the afternoon here in the US, so any minute from now, basically. Hichilema has just attended and spoken at the United Nations General Assembly this week, and he said in his speech there that rebuilding our economy is top on our agenda, and that Zambia will be reviewing its agricultural policies, revising its electricity prices, and reforming the state power firm ZESCO. So lots to discuss there for him. There's an expectation, really, that his government will implement policies to reduce fiscal deficit, to restore economic growth, and particularly to review mining policies. As you mentioned there, Zambia is Africa's second biggest copper producer, but it did default on its sovereign debt during the pandemic and billions of dollars in international debt right now. So the president's message to the IMF and World Bank is likely to be really that he is overseeing a new era for Zambia with a more market-friendly stance, and particularly giving some hope that it could attract investment into Zambia, particularly into the mining sector.
Indeed, but at the end of the day, if he's asking for bailout, essentially, because that's what this is all about, do we know if full disclosure of all debt holders, the debt contracts they've signed, the debt costs, will all of that have to be made transparent as part of any IMF program?
Well, absolutely. And as we know, Zambia is among the countries which really has suffered financially during COVID-19. And the World Bank and IMF, along with G20 countries, has already established a debt service suspension initiative for them. The idea being that Zambia would be able to concentrate its resources on fighting the pandemic and looking after their people rather than paying off the debt. The World Bank has actually given more than $5 billion in relief to more than 40 countries in some of the similar positions. But an IMF spokesperson told me today, under the fund's policy framework, the fund can only provide financing if a member's debt is assessed as sustainable on a forward-looking basis. Their assessment will require an evaluation on the member's level of debt and ongoing debt servicing burden, requiring the member to provide the fund staff with comprehensive details on their debt stock. So really, they're looking for more information there. They're monitoring the spending, enhancing public debt transparency, and also ensuring prudent borrowing. That's going to be a key part of their discussions.
Okay, one last question for you. So you mentioned the debt service suspension initiative from the G20, but that covers 2021. So essentially, it's ending in another 3 months. Are there any other discussions that, as far as we know, among the Bretton Woods institutions on a common debt restructuring plan after the DSSI, or is this it?
Well, we do know that there were discussions earlier this year, particularly between the IMF and Zambian authorities, on a new extended credit facility. They do have a broad agreement on the macroeconomic framework, and they made progress on detailing some of the key policies to enable Zambia to return to this sustained growth, which is the key phrasing they're using at the moment, with a view to having more space for social and development spending. The IMF also said to me today that Zambia is currently benefiting from the G20 debt service suspension initiative. And while the DSSI is going to expire, as you say, at the end of this year, eligible countries that need debt relief beyond the end of this year are encouraged to seek further relief under the G20 framework. So Zambia has applied for a comprehensive debt treatment under the G20 framework. We'll have to see what comes out of the meetings today to see how that can potentially move things forward.
Indeed. Let's see what comes out of that meeting. Caroline Malone in Washington, D.C. Thank you. On to Uganda now. Authorities over there say that the COVID-19 pandemic is weighing down the performance of the country's economy. The slowdown is especially putting pressure on large companies, some of which are actually threatening to shut shop and permanently leave the country. But the government insists that Uganda's business outlook is promising and it wants the companies to stay and weather the storm. From Kampala, here's CGTN's Michael Baleke with the details.
Uganda admits the country has lost some of its muscle. Uganda's largest income-generating sectors like tourism, trade, agriculture and manufacturing are struggling to cope. The Minister of Finance blames the sluggish economy largely on the COVID-19 pandemic.
Importation has slowed down. Even production itself in some factories has gone down because of lack of demand, because there is no the money among the people who are not employed. Those cannot be consumers because they don't have the money.
The slow-moving economy is driving some multinational companies out of the country. Mobile telecom operator Africell and South African retail giants Shoprite and game stores have announced plans to pull out of the country. But the government is urging them to stay a little longer.
My appeal to any company who is doing business here, please, we are going to have a very nice economy, a thriving economy. Stay put.
The Bank of Uganda's August monetary policy report notes the COVID-19 containment measures have interrupted economic recovery. The government says Uganda's economic recovery is highly conditional on the containment of the spread of the COVID-19 virus, and this depends on the vaccines being rolled out across the country. Uganda has so far inoculated more than 30,000 people, and with more vaccine arrivals, the government is keen to get jabs into the arms of at least 22 million people. But economic analysts argue that vaccinations alone are not enough to restart the economy.
Government is concentrating on firefighting the COVID, getting the vaccines, lockdown, but those actions are not going to address the long-standing challenges facing our economy. We need to think a bit longer term, in the medium term, of how to overhaul the economy.
According to Bank of Uganda, economic growth is expected to return to 6% and 7% in 3 to 4 years. This will be sustained by a strong growth in external demand, which will see exports pick up, the gradual recovery of tourism, and final investment decision in the country's oil and gas sector.
How do you support these businesses so that they get back on their feet? Those are supply side interventions. That's why we're talking about relief facilities. That's why I talk about tax relief. That's why I talk about reducing the interest rate, the central bank interest rate. Why? In order to allow more private sector borrowing, things like that.
However, the central bank notes that significant uncertainties continue to surround the general outlook. There is fear of possible flare-ups of more contagious variants that could prompt further containment measures which would reduce domestic demand, a move likely to accelerate the exit of more multinationals, but also the collapse of local companies. Michael Baleke, CGTN, Kampala, Uganda.
Let's head over to South Africa. Tourist accommodation is improving over there as pandemic restrictions do continue to be progressively eased. According to the latest data from Statistics South Africa, accommodation numbers came in 121% higher in July compared to the same period last year. But, as CGTN Sumitra Naidu now reports, tourism in South Africa is still in trouble.
Tourism in South Africa suffered a massive setback when the country went into a hard lockdown in 2020. Tourism reopened, but COVID continues to limit spend.
At first glance, that quarter was 121.8% better than the prior year. But what we've got to remember is the prior year was the middle of 2020. It was some of the worst years of the lockdown during 2020. So that isn't really a very comparable statistics. May 2021 was 53.9% less than May 2019. June 2021 was 58.7% less than June 2019.
South Africa's peak tourism season has just started and usually caters for thousands of international tourists. However, Britain, which accounts for the second highest number of tourists to South Africa, is insisting on keeping the country on red alert.
If you look at all their criteria and you look at the science behind every single one of their criteria, there's absolutely no reason that we should be on the red list. And with respect to every criteria, there are a number of countries who are amber or green, and those are now one list, as in not on the red list, who have got worse pandemic levels, less genomic testing, lower levels of vaccinations, whatever.
South Africa is now on alert level 2, and over 13% of the population has been vaccinated thus far. However, international arrivals to the country remain low.
Remember, the purpose for which this facility was created was conference business. Due to all this lockdown and COVID-19 and companies deciding to do business differently, using more of online communication.
The latest stats does indicate a significant rise in domestic travel. All lodging experienced revenue increases during July. Caravan parks and camping sites showed the highest rise, close to 3,000%.
We're seeing a gradual increase of tourists returning to the park. When we started, the occupancy was around 5-10%. We've seen a climb. Now we can claim about 20% of occupancy from guests. And what we notice is that come weekends and public holidays and long weekends, those occupancies, they tend to climb even higher.
South Africa is lobbying Britain and other countries to lift travel restrictions. In the meantime, the tourist industry is preparing for locals, especially ahead of the Heritage Day long weekend. Sumitra Naidu, CGTN, Johannesburg, South Africa.
And we continue our company news wrap with a focus on the travel sector. South Africa's embattled national airline, SAA, is back in the skies after a whole year of inactivity. Passengers on the South African Airways flight from Joburg to Cape Town were greeted on their departure by singing and dancing airline staff. SA has not flown any commercial flights since March 2020. It ceased all cargo and repatriation flights in September last year. In East Africa, Absa Bank Kenya has partnered with the Pan-African investment platform Melanin Capital. Together, they'll be launching a program that will lend social impact-driven startups, giving them up to $30,000. The initiative is looking to reach at least 1,000 women-focused startups to provide value-added services, including financial training and access to credit lines. eFinance for digital and financial investments. It's Egypt's first fintech platform and one of the leading developers of digital payments infrastructure, has announced plans to go public. However, the group has not yet set a date for an IPO. The offering is anticipated to include a primary issue and the sale of over 170 million ordinary shares on the Egyptian stock market. And finally, a rather interesting story this one. The European Commission has announced plans to force smartphones and other electronics manufacturers to essentially switch to a common standard, USB-C essentially. The proposal is likely to have its biggest impact, though, on Apple, which continues to use its proprietary Lightning connector, at least only on its iPhones. For a lot of its other devices, it's already switched over to the USB-C standard. The rules are intended to cut down on electronic waste by allowing people to reuse existing chargers and cables when they buy new electronics. That's a run through your company headlines. You're watching Global Business Africa. Time for a short break. Here's what's coming up. South Africa's cabinet approves low emissions targets ahead of COP26. And a dramatic decline in Uganda's fish stocks is threatening its exports trade. The details coming up next.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference. Welcome back to the program. Let's head over to South Africa. The cabinet over there has adopted the lower greenhouse gas emission targets in order to be aligned with that recommended by a panel set up by President Cyril Ramaphosa ahead of the COP26 International Climate Change Conference. Here's Angela Kopler with the details.
The target will keep annual emissions at between 350 and 420 megatons of carbon dioxide equivalent by 2030.
We know that there's a fair share that South Africa needs to contribute to global mitigation efforts. And that's been calculated as a range of 274 to 352 in terms of the Climate Equity Reference Project.
Yeah, it's a step in the right direction. You know, they're stricter targets, which is better than they were before, but they're still not good enough. You know, under the Paris climate agreements, all the world's governments agreed to try aim for 1.5 degrees Celsius as their vital temperature targets. And what South Africa has submitted is not yet in line with its fair share of 1.5 degrees Celsius.
The new limits reflect less ambitious targets than many had expected. There are economic repercussions to this announcement.
Signaling strong ambition at this point in time would give South Africa access to a lot of climate finance that is available globally. So South Africa has been calculated as having a relatively low cost of decarbonizing. So by having strong ambitions, some of these funds that would allow us to fund the transition that we need would be available. But if we don't give those sufficient signals, we'll see those funds going to other countries like Mexico, Indonesia, Vietnam.
Civil rights organizations aren't waiting around for the government to control the process. They are protesting against the Department of Mineral Resources and Energy.
Our biggest contributor to greenhouse gas emissions is our energy system, and the government is still planning on building new coal power plants, still wants to build a lot of fossil gas, and that is inconsistent with our fair share of meeting 1.5.
Activists have begun campaigning in earnest to get the government to listen.
We want them to stop the destruction. We want them to publicly commit to never supporting another fossil fuel development project again.
The potential economic impact of the development of a local green economy can't be understated.
If the right signals, both in terms of targets and whatever follows in terms of policy, come into being, there are many people, organizations that are very keen to get on board with these sort of green economy activities. And if they know that government's behind that and creating an enabling space for that, we could potentially see a lot of stimulus happening there, which is obviously good for the economy as well.
The good news is that government departments are revising those targets. The bad news is that government departments, like the Mineral Resources and Energy Department, are planning to bring on new coal-fired power stations. I'm Angelo Coppola for CGTN in Tshwane, South Africa.
Now, anti-coal campaigners and activists across Africa are pleased to learn that China has announced a new policy. The government over there will not be building any new coal projects overseas. Now, beyond the promise not to build new coal-fired projects overseas, China has also pledged to step up support for green and low-carbon energy projects in developing countries. The campaigners who are attending the 3rd annual Africa Coal Conference described this move as a victory for communities in various parts of the continent, like those living in Lamu in Kenya, Sengwe in Zimbabwe, Ekumfi in Ghana, and Banyi over in Senegal. All right, then, so there's that pledge in paper, but what does it mean for communities across the continent? Let's explore that in a bit more detail. Landry Interest is the Africa Regional Director at 350.org. He joins us now live from Sweden. So, Landry, good to see you on the program, but there's still some detail missing here, isn't there, on this particular policy announcement? For example, does it apply to all existing commitments to coal power plants? And we also don't have a firm date on when exactly it does go into effect.
Good evening, and thank you for having me tonight. Indeed, the announcement made Tuesday night wasn't very clear in terms of timeline and whether the decision is going to affect the project already proposed or those in motion. But still, I have to say that it's a great victory for communities, environmentalists, and other activists that have been fighting for years to end coal plant across Africa and beyond, and also to hear that China is committing to be a great leader and supporter in the just transition and renewable energy to renewable energy that we believe is absolutely needed this time to overcome the climate crisis.
Chinese financial firms, though, are still involved in at least 13 different projects in 8 different countries across the continent. So just using that as our baseline, do we have any idea what sort of coal power plants or coal projects in Africa are going to be affected by this decision?
Across Africa, around 13 projects are going to be affected by this, by the announcement, and that includes projects in Kenya, in Zimbabwe, in Senegal, and beyond, which amount over 12,000 megawatts. So this is quite significant because until now, China has been one of the biggest main founder of coal in Africa. So the end of that support means that these projects are going to be phased out and transformed into greener ones that we believe are going to be it's a huge, significant victory for those who've been waiting for this shift to happen.
Okay, but the thing is, over 90% of coal power plants on the continent are concentrated in just one country, South Africa, with over 40 gigawatts of generation capacity over there. So there's very little Chinese funding going into their coal power plants. So with respect to this announcement on Tuesday, this isn't really having a massive impact on the continent, is it?
Indeed, South Africa remains one of the biggest emitter on the continent. And the imports also from China, China imports quite a significant amount of coal from that country. But still, what is important to know is there is an interesting transformation happening where there is, again, a strong push for our civil society, activists and communities for a just transition. As we speak, I mean, this weekend, there have been massive protests across the whole country, pressing the government to implement and accelerate the just transition agenda. So yes, this decision may seem to be a very good move, but we do hope and we do believe that if China take this bold and encouraging decision, countries like South Africa that are seen as the leaders on the continent when it comes to coal production, it's going to send a signal so others can follow, starting by South Africa and others.
All right, we'll leave it there for the time being. L'entrée Intereste from the organization 350.org. Let's move on to Kenya and Ethiopia. The two parties have sealed a deal for a free trade area. They're looking to enhance cross-border trade and movement of people between the two countries. The two countries signed the Moyale One-Stop Border Post Procedure Manual. It's an operational guiding document that's expected to give them a competitive edge with regard to goods being traded across the border. The deal seeks to encourage small-scale traders by developing a simplified trade framework to facilitate their business activities on both sides of their common border. It will also help to harmonize their trade regimes, particularly with respect to agricultural commodities. Both governments also agreed on the need to reopen the Moyale border post in order to encourage legitimate trade and movement of persons, while mitigating security issues like human and drug trafficking. Local authorities in Uganda say that a dramatic decline in the country's fish stocks is making it difficult for fish exporters to remain in business. They're now putting in strict guidelines in place to replenish fish stocks that have been greatly depleted. Here's CGTN's Hilary Ayesiga with this report.
The Nile perch, one of Uganda's top foreign exchange earners, but the stock of perch is shrinking and so are revenues. Local authorities blame illegal fishing methods on Lake Victoria, East Africa's biggest lake. They say fishermen are pulling in mature fish that have not had a chance to breed.
We are going to fight this and we're not going to sleep, we're not going to sit. This must stop. We need proteins in our country. We need the products of fish. We need to help our country to put value addition to the fish.
Fishermen blame the low stock on flooding and rising water levels, which caused a drop in oxygen levels in the lake, killing large numbers of fish at the beginning of this year.
Before the recent mass deaths of Nile perch, we would come back with a big catch. But now things have changed. We get little fish.
Uganda's Agriculture Ministry says the fish catch has dropped from 57,000 tons in 2019 to just 8,000 tons in the first 6 months of this year, on track for a record yearly low. Local authorities are concerned that if the fishing industry is not properly regulated, the country will lose export revenue and many people will lose their livelihoods. An estimated 1.5 million Ugandans make a living in the fishing industry. The government is rolling out specific guidelines for fishing in Lake Victoria, restricting the size of the boats that can be used on the lake, specifying the kind of nets that can be used, and enforcing the use of permits.
Failure to follow the 8 guidelines we have given above the minister will have no choice and the ministry will have no choice. And we shall not have any option but to close the lake.
The fishermen fear that the new guidelines could edge them out of business. But fish exporters want law enforcement agencies to do more, especially in getting rid of illegal gear.
The intervention need not necessarily be only in the waters, it has to be inland as well. It has to be discipline at the landing sites. It has to be discipline at looking into the fishing gears which are coming into the market and how they are being distributed into the water. All that chain has to be looked into.
And as the government casts the net wide to increase the stock in Lake Victoria, fishermen and exporters alike hope it will mean having enough patch to keep everyone in business. Hilary Isga, CGTN, Kampala, Uganda.
Right, then away from Uganda, let's head over to Nigeria. Yam, of course, is one of the staple foods that is grown in that particular part of the country and across most of West Africa. Now, traditionally, growing that particular crop is pretty tedious, time-consuming and rather expensive. There's also the little problem of security, as these farms are often located where forests are available. But a farmer in Nigeria's southeast Anambra state is now driving a new method of yam farming, and it's gradually gaining popularity in Africa's largest economy. CGTN's Deji Bademosi has that story.
It's a radically different way of growing yams. In this case, rather than plant seed yams in mounds of soil, as it's been done traditionally for ages, they are planted in sacks. It's a new farming method Sunday Obichukwu is promoting in his community of Umunnachi in Nigeria's southeast Anambra state.
This method is easy and simpler than the conventional method of our forefathers. It is easier since it does not need frequent weeding after cultivation. It also maximizes land space to accommodate projected number of seed yams, all in bags. Another difference is that the new method retains organic fertilizer supplied within the bag, even with the rains. With the old method, the manure is washed off, feeding the weeds in the farm.
His yam farm sits on just one plot of land, which is fenced and close to where he lives. In all, there are 7,000 yams planted in sacks in the farm. Through a simple irrigation process with water pipes running through the sacks, Obichukwu is able to grow yams all year round.
So if I'm follow the only difficult aspect is unfilling the sacks, but even that is done once for the 7 months before harvest. The traditional land cultivation method requires frequent weeding. Again, with the old method, 15 plots of land accommodate about 6,000 seed yams because of the space between mounds. But with this new approach, about 105,000 seed yams will go into 15 plots of farmland.
Land is a scarce resource in southeast Nigeria, often leading to clashes between farmers and herders. There's also the problem of insecurity for farmers. Obichukwu says his method addresses both challenges, as people can convert any unused space around where they live into a farm. He also says his method guarantees food security.
I want the government to support this initiative and become a part of it. It will enable us empower the people with the knowledge and skill. Families can cultivate between 600 and 1,000 yam seeds as a measure for food security and affordable prices in the market. We are willing to teach and educate the people on the easy method. It is a method quite different from animal husbandry or poultry farming that you constantly attend to through feeding. But this remains a one-off thing that allows you extra time to attend to other things till 7 months when it's due for harvest.
In a few months' time, the yams from this farm will be heading to the market. Obichukwu says the return on investment is about 100%. He's already making plans to expand the farm to grow 1 million high-yielding seed yams each year for potential farmers. Deji Bademosi, CGTN, Umunnachi, Nigeria.
Well, just past 18:30 GMT, you're watching Global Business Africa. Here's what's coming up next. Europe is making frantic plans as it faces an imminent gas supply crisis. And San Francisco's biggest annual tech conference, TechCrunch Disrupt, has gone virtual.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Accra is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
Business in Africa is high risk.
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town, and I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Uche Okoronkwo, and I'm a business anchor and reporter at CGTN.
Welcome back to the program. Let's run through some of the stories making your headlines at this hour. Starting in healthcare, the WHO Director General Tedros Adhanom Ghebreyesus is calling on UN member states to fully support its COVID vaccination plan. He says that lower-income countries are way behind target. Ghebreyesus says that the WHO set a goal to vaccinate at least 10% of the population of every country by the end of September, 40% by the end of the year, and 70% by mid-2022. Nearly 90% of wealthier countries have now reached that 10% vaccination target, but 50 states, the bulk of them right here in Africa, will not achieve this month's goal. Zambian President Hakainde Hichilema is expected to meet officials at the International Monetary Fund and the World Bank in the days to come. This is the latest attempt that Africa's second biggest copper producer is making to secure a lending program to help it emerge from a debt crisis. The Southern African copper producer is betting on an IMF deal to restore creditor confidence. An IMF deal would essentially also help to steer President Hichilema's much-needed economic reform plan into action. And finally, the South African Reserve Bank's Monetary Policy Committee has decided to keep the repo rate unchanged at 3.5%. That was a unanimous decision today. That decision also comes as high commodity prices are helping Africa's most developed economy to bounce back from the pandemic-induced recession a little faster than expected. The bank's Monetary Policy Committee now expects a growth of over 5% this year compared to a prior forecast of 4.2% made in July. That's a run through your headlines. European businesses in China are calling for more opportunities to explore the domestic market. A recent report by the EU Chamber of Commerce in China says that most European firms in the world's second largest economy performed well in the last year, despite the pandemic and rising geopolitical tensions. The report looks into China's 14th five-year plan and its implications for European firms. It suggests the country needs to further open up its economy for efforts in green development to reach their full potential.
This diversity which fuels innovation. It is the exchange of people which bring different and creative ideas, and China should be really open for this. This is very, very important. I think especially in this area of environment protection and decarbonization, there is a huge potential to cooperate. European companies are those which stand for environment protection standards, very high standards, and all the European companies here are following this and are very strict in the implementation. Then European companies are very good at the technology, which helps to achieve this goal of being carbon neutral by 2060. We really have to work together here in this area.
The price of natural gas and electricity, at least in the wholesale market in Europe, has remained high in recent months, and the subsequent effects are constantly fermenting. Energy price changes have triggered higher costs for European companies and residents alike. CGTN's Rahul Pathak has the details from Madrid.
Winter is coming and the debate on energy prices has taken centre stage. Spanish consumers have been particularly hard hit. The country has the 6th highest GDP in Europe, but recent record rises in energy prices have meant consumers are now facing some of the highest rates on the continent. Pedro Sanchez's left-wing coalition has decided to intervene. Over the next 6 months, they intend to transfer just over $3 billion from the energy sector back to consumers. It'll be done through a mixture of price caps and tax relief on bills. It's an issue that is not just affecting Spain.
We want a European debate, and we want to analyze the causes of the current price fluctuations, as well as elements of the current law regarding price setting within the energy markets that are susceptible and could be improved by using a European approach.
Now I'm standing outside the headquarters of one of Spain's largest energy companies, Endesa. Now Spain, like Europe, is particularly vulnerable to energy price changes. Now despite investing heavily in renewable energy, it still relies heavily on fossil fuels and imports as much as 60% of its gas from countries like Russia. Now as countries recover from the pandemic, or their economies recover from the pandemic, so does the demand for energy, pushing prices up. Spain has committed itself to renewable energy and can now supply over 40% of its needs through solar plants and huge wind farms across its country. This helps reduce the need for fossil fuels, although changes in weather patterns such as Storm Philomena can affect supply. Fluctuations in the supply and demand of energy have led experts to call for a different short-term solution.
Many economists are saying that energy taxes should be absolutely neutral in the sense that they should go into the government and then go straight back out as a rebate to families. And of course, our governments rely on the revenues from the energy tax to try to balance their budgets. But that would be another solution. If you had a variable tax that was neutral for the budget, that might help us in moments like this. But of course, we'd have to get there first.
Rising energy prices across the continent could also drive up headline inflation across the Eurozone. That is something all 27 partners will be keen to avoid as they try to bounce back from the pandemic. Rahul Pathak, CGTN, Madrid.
Across the Atlantic, the US Federal Reserve has kept benchmark rate anchored near zero, but policymakers expect a rate hike as soon as next year. Owen Fairclough has this update.
After months of nursing the US economy through the COVID-19 pandemic with ultra-low interest rates, the US Federal Reserve, the central bank, has given its strongest signal yet that despite keeping interest rates on hold this time, it may finally be ready to raise them, possibly at the end of this year, but likely early next year as well. The US economy had been going in the right direction for the Fed until jobs figures from August fell massively short of expectations. And the Fed says that the US economy is still 5.3 million jobs short of where it was pre-pandemic. There's also been an inflation spike, with inflation running double the Fed's target of around 2%, what it thinks is good for sustainable economic growth. But even if that inflation spike is behind the US economy, according to the Fed, there's always a but. Here's Chair Jerome Powell.
As the reopening continues, bottlenecks, hiring difficulties, and other constraints
could again prove to be greater and longer lasting than anticipated, posing upside risks to inflation.
So if the Fed is signposting that it's ready to raise interest rates, it's also signposting that it's ready to wean the US economy off massive financial support to guide the economy through this crisis, spending $120 billion a month to help keep interest rates down so that homeowners can buy houses and remortgage. And that tapering, as it's known, that's likely to take around 8 months and is expected to start taking place maybe next year if our economic conditions are right. But there's another huge problem looming for the Federal Reserve, and that's the prospect of the US government running out of money to function and closing down. There's not an awful lot the Fed can do about this. It's up to Congress and specifically lawmakers to decide whether to raise the debt limit or extend the deadline even further and kick the can down the road. But the Fed is ultimately the lender of last resort, and in the event that the US failed to meet its debts because it's hit its debt limit, would have to manage a massive default that would send shockwaves through the global economy. But again, there's little the Fed can do about this apart from plan to potentially clean up the mess. Owen Fairclough, CGTN, Washington.
One of San Francisco's biggest annual tech events, TechCrunch Disrupt, has gone virtual this year. The event is also taking on a range of topics that emerged during the pandemic, vaccines included. CGTN's Mark New is there.
At TechCrunch Disrupt, startup entrepreneurs pitch their ideas in an online battlefield. The goal is to win the competition, but more importantly, attract venture capital investors. This year's TechCrunch Disrupt brought in perhaps the most impactful startup of the year, BioNTech, the developer of the mRNA COVID-19 vaccine manufactured by Pfizer.
In Germany, it is not the same culture as in the US. You have the enthusiastic founders.
Yes.
So we were not at the enthusiastic founders.
You were reluctant founders.
we were the reluctant founders.
Having researched potential treatments for cancer, including mRNA, all the way back to the 90s, Sahin recalls how he and his co-founder wife weren't sure investors could wait years for results.
It was just taking time from our research. Are we losing scientific quality because we are dealing with all that? And then we realized that we would never forgive us, if we would not go to this, because we will never know.
The rest is history, as the BioNTech Pfizer vaccine has now become one of the most sought-after vaccines in the world. Sahin believes their technology can have applications well beyond COVID-19.
To provide the patient the best possible treatment based on the actual knowledge of the planet at that time. So we are talking, for example, about adapting our vaccine to COVID-19 variants.
Right.
But the same can be considered for adapting a vaccine of a cancer patient to his changing tumor. So it's technically the same step.
Health and biotech advances, as well as advice on growing a startup during the pandemic, also took center stage. Cybersecurity company CEO Robert Herjavec, best known for being one of the investors on the popular TV show Shark Tank, says COVID-19 has changed the hiring landscape.
If we valued our employees before COVID, man, we really value our employees now because people have a choice. People can go anywhere. And the war for talent is at an all-time high. I'm sure everybody on this call has heard this term now, the Great Resign.
Herjavec used to describe business as moving at light speed, but now he says he refers to it as COVID speed. He says with today's workforce being untethered and being able to work anywhere in the world, it's up to employers to better support their staff in order to retain their talent. Mark New, CGTN, San Francisco.
Netflix. Let's talk about Netflix. They reported over 209 million paying clients worldwide at the end of June. But new member pickups slowed down in the first half of the year after a boom early on in the COVID-19 pandemic when we were all, staying at home. Now, the streaming giant has turned its attention to Africa. They've rolled out a free mobile plan for some of its content in order to push subscriber numbers up. Here's CGTN's Alexander Majala with that story on What's Hot.
Netflix has begun offering a free mobile plan with about 1/4 of its TV shows and movies in Kenya. The strategy is aimed at sparking growth in a key African market.
Then if you look at Kenya, the mobile penetration is actually very high. It's not only in the cities, it's everywhere. Most of the average Kenyans actually own a smartphone. So with that, then you will find that if they give this free subscription, then you will find a lot of people are going to subscribe because they have access to smartphones.
The free plan is available on Android mobile phones and will not have advertisements. It features Netflix movies and TV shows such as dramas Money Heist, Bridgerton, as well as African series Blood and Water. It also includes some of the programming the company licenses from others.
What we found in there as soon as I subscribed was there was something for everyone. So my 10-year-old son had something, my 12-year-old daughter had something, my 23-year-old daughter had something, I had, yeah.
Netflix hopes the free plan will lead to users signing up for a paid option with more content. The world's largest streaming video service is looking to add customers outside of more saturated markets, such as the United States, where new subscriber sign-ups have slowed at a time when competition for online audiences has intensified.
Here's Netflix, cutting edge in a sense in terms of content, and a bit behind in terms of accessibility for payments. So if they introduced an M-Pesa aspect of it, they'll find a very big difference. In fact, I think possibly one of the possible reasons why the market has not subscribed to Netflix in the numbers that they probably expected in this country, I know for sure, is the ease of payment.
The free plan started on September 20th will roll out across Kenya in the coming days. This is not the first time Netflix has experimented with free offers. In 2020, it made some episodes of series such as Stranger Things and movies including To All the Boys I've Loved Before available around the world for no charge via web browsers. The free plan in Kenya is broader. It will look similar to paid Netflix profiles to give viewers a feel for the service. Shows that are not included in the free plan will be marked with a lock icon. Clicking on one of those titles will encourage the user to sign up for a paid option. Alexandria Majala for CGTN.
Right, then a very brief update with respect to commodity prices. Quick update on that. Let's start with Brent crude. They've gone as high as $77 a barrel today, $77.27. In fact, that's essentially the highest intraday level I've seen in around 5 years of Bloomberg data. Gold also does continue to decline today. With today's near 1% decline, it takes its year-to-date loss to around 7.8%. Here's what's coming up next. When we come back, we'll explore how farmers in Uganda are tapping into digital marketing talents to sell their produce online.
Africa is a continent of diversity, with varied climate and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Aden, Djibouti, Tunis, Cairo, Juba, Johannesburg, Ethiopia, Tanzania.
Africa Live. Find your voice.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Welcome back. One final story for you in the hour. This one's from Uganda. A group of digital marketers over there are helping smallholder farmers to sell their fresh produce online. The United Nations Food and Agriculture Organization estimates that farms in sub-Saharan Africa fail to sell up to 50% of fresh produce. That's an enormous amount of food wastage. CGTN's Isabel Nakiria has that story on Grassroots.
Tons of Irish potatoes ready for delivery in Kampala's markets and hotels. This warehouse outside the capital, Kampala, buys Irish potatoes from rural farmers and sells with the help of online markets.
We have different online markets. We have Jumia, we have Walimi, we have Safe Border, and then we have personal distributors.
And to ensure good standards, the Ukumbi warehouse supplies quality seeds to the rural farmers to maintain good yields.
Most of our market here, they don't want a small size, since most of them use for chips. So you find when you have a small size, we have to again take it back to Fort Portal and use it maybe for seedling.
With support from online markets like Walimi Katali, this farmer store has managed to sell out all its fresh potatoes much easier and faster. The digital team says they are trying to scale up markets for farmers using technology.
We have a lot of farming going on the continent, but then when you look at farming, agriculture and technology, there's been a gap. Agriculture has been left behind for a long time, and yet if you just came in and just used technology to transform agriculture, there's a lot of mileage you could attain.
Many rural farmers lack cold storage for their fresh produce, and a lot of it goes to waste if it can't be sold quickly. Many more farmers have already signed in on this online market and are selling a wide range of fresh produce. This kind of technology is not only helping farmers avoid farm losses, but also improving their incomes. The Food and Agriculture Organization says it's trained 80 farmer groups in Uganda in good farming practices and improved technologies. The UN hopes farmers can put these skills to good use to enable them to have bigger yields and also avoid wastage. Isabel Nakiria, CGTN Kampala, Uganda.
All right, then a quick update on the currency front as we wrap up the program. As we mentioned earlier, the South African Central Bank leaving its main policy rate virtually unchanged today. It did raise its GDP growth forecast for the year to 5.3%, worlds apart really from the 7% contraction that the country had last year. And remember, this is the lowest repo rate the country has had since 1998. For those interested in fixed income earnings from the frontier markets, the Kenyan government is looking to raise about $540 million in 3 notes, a pair of 15-year notes from 2013 and 2019, and a 25-year one as well. You're looking at coupon rates between 11.25% and nearly 14% on all three. That's where we wrap up this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen on the program in the last hour. Many ways to get your feedback back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.